What's good, everybody, man? My name is Sion Willis, and I recently really just had a breakthrough. I got invested in the day trading. All right, now, day trading is a great skill to learn, bro. It's very hard and it's very harsh, but it's actually a great way to go from 0 to 100, like for real. Like, I've been learning day trading for about 2 years now, and on the second year, I finally kind of figured out the perfect strategy that works for me. And I told myself that when I learned how to actually day trade, I was going to teach people, because I didn't have help learning this stuff. I had to do it on my own, and I know how that is. So today, this video, I'm going to be going ahead and showing you guys pretty much the basics of day trading, and that's absolutely free. So I'm going to go ahead and do that. And if you guys want to learn and have a complete guide and full breakdown on how to day trade, bro, literally from going from 0 to 100, bro, the link is in the bio for my ebook. It's only $10. Yeah, but if you learned anything from this video, man, please make sure to hit that like button, subscribe, and comment you guys' questions, like your exact questions, and I'll try my best to answer them in the next video. But without further ado, let's get into it. All right, what is good, everybody? All right, so right now I'm gonna go through the top 3 brokers that I used when I first started day trading 2 years ago. When I first started, the first thing that I did use was Tradeovate. All right, this is a platform for futures. So if you're looking to trade futures, this is the best platform to trade futures. It's called Tradeovate. I was using this. They also have a demo account, so you can get on there, practice, which is very important. You really want to practice, bro. Practice makes perfect with anything that you do. So make sure that when you're doing this, you always practice, okay? Second one that I got into was Oanda. Now, Oanda is a Forex broker. So you can trade Forex through it. And I'll get more into detail about futures and Forex, but I personally do like trading futures. It's just, I don't know, the market is a little bit more fluid. It's just a little bit better. And the last one, where you can practice, you can actually use Oanda and Tradeovate on this specific platform, which is called TradingView. Now, TradingView was what I was using to practice, to do all of that. Like, they also have subscriptions. A subscription you can get where you can unlock more of what you need to do. But ultimately, TradingView is like, you need to get familiar with TradingView. This is the most valuable and perfect platform, I'm telling you, for any type of trading that you want to do. Stocks, Forex, indices, anything like that, all of that stuff. So when you go on TradingView, you want to go ahead and head up there to products, scroll down to super charts. All right, super charts, it's gonna bring you up to a chart. Now, I was already pretty much trading and doing this kind of stuff already. So I'm gonna go ahead and delete this so I can explain pretty much everything that's going on. Actually, we can just go into another. Let's go ahead and go to futures. I'm gonna go to US oil. We're gonna go to oil. First thing, as soon as you load up TradingView, the first thing that you want to absolutely do is go up here to this bar next to the indicators. It should be literally left of the indicators, okay? It should be left of the indicators. Click on that, and it'll be on this. Do you guys see that? That looks really bad, doesn't it? That looks really bad. I don't like the regular candlesticks. They look, I'm like, what is that? I don't know. I don't like, what? So to fix that view looking thing, you want to go over there and you want to click Heikin Ashi candlesticks. All right, so it'll be right down here. You can also favorite it, and you want to literally use Heikin Ashi candlesticks. All right, it's the best looking one. As you can see, it doesn't look all cluttered and just stuff everywhere, just lines. You know what I'm saying? So right now, we are in the US oil, which is futures. Also gold, silver, things like that. That's all part of futures. They got Euro, USD, GPB. That's all Forex. GBP, USD, JPY. All of that stuff, that's Forex. That's the Forex market. But right now I'm gonna show you this example of, I'm gonna basically break down everything in the futures market. So let's go ahead and get into it. So first thing that we're gonna learn is what are candlesticks, right? So what are we even looking at? Right now we're just looking at a chart with just red and green colors, right? So let's go ahead and zoom in. Let's go ahead and break this down a little bit, okay? First thing we see is this market is actually not fluid. So it's like, it's gonna pilot. I might have to switch. It's not that fluid right now, but it's okay. So we can look at what is a candlestick, right? So this right here, this is a green candlestick. Okay, this is the green candlestick, also known as bullish candlesticks. That's actually how you want to say it. Bullish. You want to say, oh, okay, we're in a bullish market, or we're in a bearish market, which is the red candlesticks. So what I use to differentiate the two is bear, always run, go away, right? Sell, bear, it means down, right? Red means down. So when I think about bearish, I think about, oh shit, like it's going down, like, you know what I'm saying? It's going down, right? Bullish is going up, like it's going up. So that's kind of how I differentiate them, by knowing, like, okay, bear obviously means down, right? You don't want to be near no bear, but you can also make money from that bear though, like we're gonna get into. So bearish is the red, bullish is the green. Okay, so those are the two types of candlesticks that we're looking at right now. Okay, so what, I know you probably asking, what are these long lines right here? Like what are those lines? What are those lines? So okay, how I can explain it better is by looking at, let's use a longer one right here. So the markets of the bullish, right? So the bullish candlestick itself, it opens up down here, right? It opens up down here. So since it opens up here, like literally at the bottom of that, that's where this particular candlestick opened up. It opened up right there, and it went up there. So on this one, it opened up right here and it closed right here. But it had, it wanted to go up there though. It wanted to. Prices wanted to go up there, but it didn't, right? Until the next candlestick came along and it actually closed a little bit above this one, right? It closed up here, but it wanted to go all the way up here. It wanted to go up here, but it didn't. It didn't reach up here. It went down, right? It closed. It ultimately closed right here, but it wanted to go up there. So basically what the Wix is saying is it wanted to do that, but it didn't. So even on the red, right? So the red is opposite from the green. So if the green opens up here, open up down here and closes up here, this is the opposite. So it opens up at the top and closes at the bottom. So yeah, so like I said, the green ones open up down here, closes up here. The red ones open up here and close down here. And ultimately it wanted to get down here, but it just didn't. It just didn't get down there. So we got pretty much candlesticks out of the way. What this right here means, right? This right here means it's indecisive, right? So it could possibly go up or down. There's another thing about it. If this is bigger than this, sometimes that can indicate that most likely it's going to be going up, right? So if this is bigger than that, this whole thing is bigger than the one previous, that can, like, a lot of people say that it goes up. But when I was doing research and I did my own research, it means that was going down. So like I said, man, it's a whole lot. They have they have names. Like this one right here is called the hammer, right? It's the hammer. It's certain things you can look for, but in this particular market, it's not really fluid. So it's like not the best time to trade at all in this market. It's not really fluid. But I'm using this market to kind of explain what's going on. Okay, so let's try gold. Okay, gold looks Gold is way better. Okay, way better. We're gonna use gold. All right. So from right here, it's still not as fluid, but it's more. I can better explain it better. So second thing you want to do, you want to come over here to the bars. There should be a bar all the way on the side. You want to click on this. What you want to do is favorite it, the trend line. You want to favorite the horizontal line and the horizontal rate. But we're mostly going to be using the trend line for this video. Also, you want to come over here and you want to highlight right here where it has the 3 lines and the little dots going to the lines. You want to highlight long position and short position. Those are other 2 things that you want to favorite. And last thing, you want to click on the brush and you want to come down here and get the rectangle. That is for the strategy that I'm about to teach you right now. So now that we understand what candlesticks are, bullish, bearish, we know what the wicks actually mean on the candlesticks, that they wanted to get there, but they didn't. And yeah, that part. So we know what we're getting into and what we're not. So now that we understand candlesticks, now we need to understand trend, right? Because we understand the candlesticks, but we need to understand what we're looking at and how this plays a role in the strategy I'm going to teach you. So if you did favorite the trend line, you want to go ahead and highlight the trend line. And what we're going to do is come over here and lock all drawings. So we're going to lock it. And we're just going to start from down here. Okay, we're going to start from down here. We're going to make a trend line going up to the point. Boom. That's a higher high. And we're going to go ahead and get a lower low. That's a lower high. Or it's a higher high, lower low. This is a lower high. And this is a lower low, okay? Because these are lower than the previous ones we just did, right? So now, since we understand the trend lines, you understand how to make it, right? You just pretty much going over it, okay? This would be considered a higher low, a higher high, because it's higher than these previous lower lows and lower highs. Get down. Now this right here is a higher high again because it's higher than our previous. So this is our higher high, right? So now we know that we're actually going in a what trend? An uptrend, because we went from higher high to lower low, higher low, lower low, lower high, higher, whatever, all of that stuff. And ultimately, now we're pushing upwards, right? We're pushing upwards. We're going in an uptrend. So now that we know that we're going in an uptrend, my computer literally shut off. I'm not sure. I might have been pressing the button. But now that we know that we are in an uptrend, we can, well, right now, since I last got on here, it looks like we're actually in a downtrend. We got a higher high, a lower low, a lower, like, yo. So now we're in a downtrend. So that's actually pretty good that we're in a downtrend. Because now we're going to be looking for sales, right? So we follow the trend. We're basically following the trend. So whatever the trend is doing is what we're going to put a buy on or a sale on. So since we're in a downtrend, we're in a bearish market, we're looking for sales. Okay, so the best way to do this is with the support and resistance strategy. Okay, this is how I made my money. This is how I did it. It's a great way. I'm telling you, it's a great way to make some money. All right, you're in and out. That is the strategy, but you really have to worry about your risk to reward, which I'm gonna get into. So pretty much support and resistance. So what we're going to do is we're going to take our highest point where it wanted to go, but it just didn't, right? Which is right here, right? This is our highest point at the moment, right? This is our highest point at the moment of what's going on, right? So we got our highest point right here, right? I'm so sorry, y'all. If I'm missing something, like I said, let me know in the comments, bro. I was just my first time ever teaching anybody anything. Okay. I just really want to teach you guys this, bro. It's really effective and it really works. So what I'm doing is the support and resistance strategy. So let me go ahead. This right here is your resistance, right? This is your resistance. This is your resistance. And this is your support. So now we have support and resistance. So basically, what the support and resistance is we're waiting for prices to hit one of these, either support down here or the resistance up here. And what we're waiting for is for it to bounce off, right? So kind of think of it like a wall. Think of support and resistance like a wall that you want something to bounce off of, and that's how we're gonna make our money, right? That is exactly how we're gonna make our money. But we're gonna move with the trend. So we know right now we're in a downtrend. So it could possibly get all the way down here or even lower than that. So we're now in a downtrend. We have a lower low. You see how it's going? So we're in a downtrend. So now that we know that we're in a downtrend, really what we wanted to do is to bounce off our resistance. We wanted to bounce off our resistance because we know that we're in a downtrend. So it'll just solidify it if it bounced off our resistance, right? Because we don't want to go into this market right now. Yeah, we see it's in a downtrend, but like I told you, nothing really goes straight down and nothing goes straight up, right? There's a fluctuation of sales and buys. All right, it's a fluctuation. So we just got to be patient. And that's where the most important thing comes into play when it comes to day trading is most definitely having patience. Because the market is very, it could be news can mess it up. Anything can really mess up a market that even looks like this. It looks like we're in a downtrend and the simplest thing can mess it up, which is why this strategy is perfect. Because really you're waiting for solidification. You're waiting for a solid entry point. And this is the perfect way to do that. And that's why I've won 70% of trades. I won 70% because I know that I have patience enough to know, okay, I'm waiting for it with the market to do what I wanted to do. You get what I'm saying? So I wanted to bounce off the resistance so I could solidify my money, right? The money I'm going to make off this trade. So that's pretty much it. Right now, it's looking like it's going to break the support, which is good. Because we know we're in a downtrend right now. And like I said, it can go super low. We're in a downtrend. We're in a bearish market right now. We're in the bearish market. So, okay. So right here, we can see a green candlestick, which solidifying that, okay, it's about to go up. But we want it to hit the resistance. So it's really just a patience thing. I don't really have enough time in the video because I'm pretty much just explaining pretty much what I would do, right? So this one is bigger than this. I feel like it's gonna go up, right? But what we wanted to do is respect our resistance. So we wanted to go up, but we wanted to bounce off. We wanted to go up though. That's what we initially want. But we want to solidify our money. We want to solidify it. You don't want to do that. That's me rushing. That'll be me rushing. You want to stick to what you're saying. So if you say, oh, I want to wait till I hit my resistance, wait until you hit the resistance, bro. Don't be like, okay, well, I see it still going down. I'm about to put a short in. Because as you just seen, it was a green one. We'd have lost money. It was green. I could play, oh, you know what? My risk to reward ratio ain't that bad. I'm going to put it in here. Because I can see it still going down. Yeah, I was wrong. It went past the support. I'm just going to go ahead and put it right there and put it on down. Get a 1 point ratio, whatever. Then you would have lost that trade right then and there. So please make sure if you set a thing for yourself, stick to it, bro, because it'll help you in the long run. Yes, it's gonna be a long time, but be on your phone, play the game, do something to pass the time. You can even put alerts like right here. If we waiting for it to bounce off, we can literally double click, or is it right click? Yeah, you can right click and you can actually put, let me see where you could do that at. Alerts. It's right here next to replay. You could literally put an alert or whatever, right where you want it to be. Yeah, you could put an alert. The alert right here. You could put an alert. You can move it. Right here, you see that plus? You see this plus right here on the side of the thing? Once prices hit this alert, right there, you can allow it on your computer and chill, because now you have an alert. You have a literal alert. Soon as it hit that, you can go to your phone, on the app on your phone, TradingView on your phone, anything. You could put it right there where you need it to be. So the alerts are very powerful too. You can use, soon as it hits this, you can go look at it to see if it's going to either break your resistance or bounce off. So TradingView is a really great platform to just see. Like, I place alerts all the time. Alerts is very good, bro. You need alerts. So if you are able to trade without alerts, but that's only in like a very fluid market. Like if it's moving, like, you know what I'm saying? There's certain times, excuse me, it's certain times to trade too. In certain markets, futures could be at a certain time. Forex, I usually trade at 3 o'clock in the morning. That's the best time to trade to me. But yeah, you can also see over here, you have your alerts that's active. These are all trigger stops. You could delete these, but we have something that's literally active. As soon as it hit that, it's gonna give me alert. It's gonna give me alert as soon as I hit that. And you could do this on different markets. So right there, boom, we did that for that alert. We could go ahead and go to US oil. We could go ahead and create our support and resistance right here, because it's the highest it went, and this was the lowest it went. It's just harder to do it in these type markets because I'm not really sure if it's in an uptrend or a downtrend right now. It wasn't a downtrend at this time. It was in a really downtrend. It was still going down, but it looks like it might be in an uptrend. But that's pretty much, yeah. So I mean, this right here, we can kind of see it is in the uptrend. It went up, went higher highs, higher lows. So we had a lot of higher lows and higher highs. So this is most likely an uptrend. So we really might be looking for sales. So we're looking for it to bounce off this bottom and go to the top. So we're looking for it to go down, hit in here, and bounce off. We're looking for buys in this market. So honestly, right here, you could set an alert on this one and be like, oh, you know what? I think I got something. I'm gonna put an alert. Downtrend. It went down like a mug. So right there, that's what I'm saying. This market is a little weird. I ain't gonna lie. This market is a little bit weird. I'm not really sure about this market at this time. Like, but gold, this is where it's at, right? Gold, this is where it's at. You can already see this most definitely looks like it's going in an uptrend. But ultimately, we're waiting for it to hit our resistance, which we already got an alert. If you got your alerts, you good. You're doing what you're supposed to do. You got the alerts. You know where it's gonna go. You already know once it hits your resistance, that alert go off. You go to your alert. You look at it. You wait for it to bounce off. You're making a sale. Soon as you see it and it hits the top and you see a red candlestick, make sure that it's a full red candlestick though. Don't just sell. You want to have clarity. You want to have as much clarity as possible so you're not losing money, because the ultimate goal is to make you money, not make you lose it. I explain a lot more of this in my ebook, like for real. Like, make sure that you don't just react off impulse, because that can affect you in a big way, more in a bigger way than you think. Impulse is gonna be your biggest enemy. Revenge trading is your biggest. Like, don't try not to do those things. So I explain it more in my ebook. Just make sure, bro, y'all keep Keep it. Don't. I'm telling you, don't trade off emotions. For real, because the market will chew you up and spit you out, literally. So pretty much, we're just waiting. We're waiting for it to hit our resistance. Now, if it go past our resistance, that's fine too, because now we know that we're in an uptrend. So now we're gonna look for buys, right? But 9 times out of 10, you're really waiting for it to bounce off. That's the ultimate goal. You're waiting for it to bounce off of our resistance, and we want to get a clarification candlestick, which should be a red candlestick, since we're looking for buys. I mean, for sales on this one. Since we're going to downtrend, we're looking for sales, right? Because we're in a downtrend. So for our sakes, we want to go ahead and boom, make it bounce off the resistance. We want to initiate that red candlestick right after the break off, like this. We want it to look just like this. How this looks right here. How it hit that. It went down. We seen a red candlestick. Then right after that, we seen another red candlestick. That's clarification enough. That is enough to where I'm buying. I'm buying. And even if you see this, don't get scared. Don't pull out. Make sure you set a good ratio and stick to that ratio. Always keep it within 1 to 1.3. Don't go no higher than 1.3. Really, I don't even want people to go to 1.3 starting off. You should start at just 1. Try to get as near 1 ratio as you possibly can, because the better you do that, the easier to be. Like, you won't lose too much money, right? So starting off, I did it wrong. I was going to 2.8 ratio. I was losing a lot of money in the beginning. I was giving up. I'm telling you, make sure the risk to reward ratio is at least 1.3, or just try to make it 1. Like, if you can, try to make it 1. If you feel confident enough, 1.3. But if not, 1. Okay. Like I said, TradingView, you could practice on TradingView. You could practice on Tradeovate. You could practice on Oanda. You could practice on all these platforms. All of them have, well, Tradeovate and Oanda have demo accounts you could practice on. So make sure you get as much practice as you can. I would prefer you practice for about, I would say 3 months. Me personally, I would say 3 months. Practice with that money. Get used to that margin. You know what I'm saying? And see where you at in 3 months. See your percentage of win rate within 3 months. If it's profitable, then I would probably open up a funded account. Start making real money, right? You can make that real big bang. But until then, I would say 3 months. 3 months. Give yourself 3 months. Keep practicing the support and resistance. Keep seeing what it does for you. Keep practicing that support and resistance, because automatically we could see right here, it never went down. It never went below our support. It closed. All of these closed above our support. It didn't go no further than right there. So automatically it supported it. But now we seen it didn't get up there. It didn't get up there. So it's really not as fluid in here as well. It's not that fluid. But it still didn't get up there. And it still could go up. Right now, it could still go up. So, like I said, it's a lot about patience, bro. You got to have patience. And you got to have patience when you trading. But I think that pretty much covers everything for this video. If you guys have any questions or any concerns, bro, let me know in the comment section below. If this video taught you anything, make sure to hit that like button, and look in the link at my bio. I have my ebook down there where I really break down all of this stuff. You come back to the video and get a visual of what I'm talking about. Okay, so US oil, it hit our mark. Okay, yeah, this market is crazy. I don't know what's going on with this market, but yeah, this market right here is really ridiculous. We're not gonna worry about that. But yeah, if you guys learned anything, please make sure to hit that like button, man. But it's been good. Hopefully I taught you guys something, and I'm out.